The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 27th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the buyers and the sellers, what the bulls and the bears are communicating to you and I at just past 1 o'clock in the afternoon, just prior to the release of the Fed statement at 2:30. We'll go see if the market has given us any clues here. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone. Now's not too early. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on Wonderful Wednesday. This, of course, is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have pretty much a flat market. The Dow is off 17 points, trading at 18,457. S&P is off 6 points. It's trading out at 2162. NASDAQ Composite up 17 points at 5126. Russell 2000 down 250. So we're going to call that a flat market, but there are some clues out here, but we don't have a unanimous decision. A unanimous decision has not been rendered. We have the DAX close up 72 points, the FTSE up 26, gold's up 5, silver's up 32 pennies, light sweet crude is down $1.07, trading out at 41.85. So, we're going to go try to piece this together. And I literally just hopped into my seat. This morning's been a long morning or day already, about 7 hours worth of driving. So I'm a little bit on edge here, if you will. So I'm really just sitting down. Literally, was able to get a quick market update out to my newsletter subscribers. But that was just looking at basically two things, very quickly, two important things to take a look at, just so they could understand and position themselves with regard to the market, what it might do. But what we're going to do here today, first take your calls, answer your questions as best that I can, and see if we can get a feel for what the market is communicating to you now. Because at this stage, I'm not totally neutral in the market. There's an area in the market that I'm definitely not neutral on, but there, with regard to the stock market, which is what we're talking about right now, I'm trying to speak about right now, I'm neutral. So I'm really looking for those clues as to what the market wants to do. So let's begin that process. And to start off with, let's go take a look at, I'm going to start with the volatility index, get a feel for what we have going out here. And when we pop open this chart, we're still looking at the significant contango, you got to love that word out there, that exists between the cash VIX index at 1368 right now versus the furthest out futures contract, which is trading at $20.40. Now, give or take, that's about a $7 difference. And 7 divided by 1368 gives us about a 50% number. Yeah, I'm just rounding here. When you see that type of contango, it says something is out of line. Now, typically what's out of line is not the futures contract. In this case here, that would say that the VIX index is likely going to move higher. We know when the VIX index moves higher, it starts to put pressure inside of the S&P 500, which can either move sideways to lower out here. Now, what this says to me is that the VIX index, just looking at that, knowing that we have that contango out here, knowing that the VIX index is trading above 1244, that's an important level that has failed to act as, it's acted as, in essence, support the last 2, now 3 trading sessions. This says to me that the VIX index wants to take a ride on the reading, and that reading is up to the price point of 1503, maybe 1557. You get above 1503, then it's a whole nother scenario. It's a whole different change of the fabric of the market. It says we get a little bit deeper correction versus rotational type correction out here, and says the VIX would head up to the 1870 level. Watch 1244, watch 1503. Those are the key numbers to be watching. But if we didn't have to worry about the Fed releasing a statement, the message here would be very clear when we just take a look at the contango and we take a look at the VIX index and a special tool that I use out there. So that's with regard to it, which in essence is speaking for the S&P 500, or is it? Well, let's go take a look at the S&P 500. So that will be our next maneuver out here. I have the Russell up on my screen, but we're going to go try to keep this in logical order. It's the only thing that we can do. In the S&P 500, the Stevie's key red line, and so this is going to be important today, that number is 2168.86. We are trading at 2162.26. Again, I don't know how the market's going to respond to the Fed, but what I can tell you is as of 112, if the market knows anything, if it's giving us clues, what it has given you and I a clue of is be ready for the retracement to begin. We're not going to take a look at right here. We're not going to take a look at where that retracement is necessarily headed to, but that would be the message based on taking a look at the three type of charts or tools that would give us that indication. So that covers the S&P 500. Well, let's not say that it covers the S&P 500. Let's go take a look at let's look at the futures contracts, right? So let's go back to them out here. Let's take a look at the daily on the ES mini out here. It's trading below 2162.75. That's a key number. Now, the reason why I give you these numbers, I'm not suggesting that you go out and you place a trade now. I mean, you can if you want. But I'm saying I'm giving you this information so that you will know by the end of the day which side of the trade to eliminate out here, because if price gets back above these numbers, both in the S&P cash, the ES mini out here, the VIX falls back below that, what it was, 1244 level, you're going to have a clear message that the markets want to move higher. If instead we see closes below these levels, and in the case of the VIX above that 1244, you will also have a clear indication of where the market wants to head to. So that's the daily charts out here. That way, we're not having to necessarily take a look at intraday charts, although we should. I probably should just take a quick peek at the 30-minute chart out here. So let's do that, see if there's any kind of patterns to be focused on. Well, I guess there was one. I don't know if that really was a seventh wave out here because of yesterday's action. But let's just do some counting to the downside out here. Let me make sure that that is indeed the session. Yeah, that is the session to deal with out here. So nothing yet. Hey, we've got to close below a hammer candle that formed at 11:30. Okay, that's an important piece of information. That says on a bounce, maybe you would see a move up to the bottom of that hammer candle with price having gotten below it. If you were trading on an intraday chart and you were bearish, that's what you would want to see, not if you were bullish out here. So that says lower price. That's 2158 is the number. So watch that as a resistance zone out here. The next area that I would pay attention to on the 30-minute chart really takes us back into the trading day at 3:30 in the afternoon, and that's on July 21st. There's a nice hammer candle low. There's a 100% move of a move. That price point is 2153.50. If you see a close below that on a 30-minute candle session, then what we just took a look at on the daily and so forth, just adds to that message out here. Now, where is it that, and we'll take a look at the ES mini out here. We'll use that as our real gauge. And the futures contract, where is it that price could head to? Well, we'll be right back from this break. We'll do it when we get back here. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Sorry about that. I wasn't paying attention to my clock out there, and pretty much ran to the very last second out there. So thank you to Steve, who kind of made it seem kind of smooth out here. Now we're back at the ES Mini. Just as now, I'm giving you different numbers. You know, we take a look at different time frame charts, different instruments. You're going to get some different levels to be watching with regard to these technical indicators, but you can put them all together to really help you identify where price is headed to next. Now, in the case of the ES Mini, any close below 2152, that happens to be the bottom of its TAS daily market profile, a box that's been in existence for 2 days. That would then say price would target the 2107 to 2119-ish area out here. That's what I would be looking to the downside. To the upside, if price is able to take out 2169, we'll call it 75, then what price ought to do is head up to 2204. So there's your two sides of the trade out there, and take a look at the S&P 500 and the ESP. Now, we had several questions that came in, and so let's get to those questions first. One is from Bob in Colorado. Bob wants to take a look at Freeport McMoran, FCX out here. Now, I should try to... What the heck? That almost close out that chart. Give me a moment here, Bob. I think I've got a chart specifically on FCX. Let me see if I can find it here off in the distance, because in the case of FCX, what we want to take a look at as well is going to be the Australian dollar, right? If you're trading one, you're trading the other. I've also got high-grade copper out here. Let me go ahead and turn off the copper portion of this chart, and this way we can try to answer his question. His question was, he's looking for an entry price. Now, what I want to do here for Freeport McMoran, just give me a moment. I want to go ahead and add in the market profiles. Let me see if I can do this quickly. So a little bit on the fly, and if I can't do it this way, I will find another way to do it. Let's see if it goes ahead and inputs those. Yeah, it's going to do that for me. So far, so good. Let me get rid of the 60 and 2 40-minute time frames out here. Okay, so the bottom portion of my chart, Bob, is Freeport-McMoRan. The top portion of my chart is the Australian dollar. Now, had you not been a listener or watching this show today, those of you that would be trading Freeport-McMoRan, you wouldn't have known that you're really trading the Australian dollar versus the U.S. dollar. The top portion of my chart is, in fact, the Aussie dollar. Take a look at that directional movement between it and Freeport-McMoRan, and you're going to see, wow, you really should be paying attention to it. So part of the question that needs to be answered is, what is it that we think the Australian dollar is going to be doing out here? Now, with regard to Freeport-McMoRan, if we just take a look at the bottom portion of our chart here, here's what we know today. Number one, what Freeport-McMoRan has done, let me go ahead and see if I can add the volume to that as well. That's probably a smart thing to do. So we're going to add that to the bottom portion of my chart. Then we can get a decent metric there. There we go. So now we've got volume. Did it show up? I don't know what that. Yeah, I think that's the volume there. Let me just do this. Yeah, okay, that's the volume. So here's what we know. There was a slight gap down, it looks like to me, that took place between May 2nd and May 3rd. The volume out there was 58 million shares. Now, today you're up into it. You've tested that level with so far 38 million shares. Now, I'm not a math genius, but it seems like you're tagging that area with volume. But the question is here, if you reject that little window today, hey, it doesn't matter with volume or not with volume. If you close below 0.7, that's not right. If you close below, give me a second here, 1331. 1331 is the key number to be paying attention. If you close below it, even without volume, you still have a significant level of resistance out there. You may go back with volume and test that area again, which is either going to be the low of 1331 or 1403. And Bob's concerned that he might have missed out on the entry point. I would say at this stage of the game that the entry point, your best entry point on Freeport-McMoRan, is down around the $9.29 level out here. That will occur if we see a close below, and this is what you want to be watching, Bob. You want to be watching $12.17 out here. Now, of course, whatever it is that the Australian dollar does, we have to spend more time on this, but I'm going to throw that out to you just for your own trading. Does anything stick out at me? You want to be paying attention to that in trading Freeport-McMoRan. I think we've shown that out here just when we take a look at the correlation. I was trying to slide this thing down. I'll do it. Come on. There we go. Slide it down. Now, with regard to the Australian dollar, I see a nice little trend out here, a nice trend that has begun off of the lows back here in January. So that trend is still intact out here. Ideally, the way that you would time this trade is you time this with the Aussie dollar coming back and testing that trend. It's around the 73-cent level. At the same time that FCX is pulling back on light volume and testing some level of support out there. It might be a TAS market profile. It might be a swing point. But at this stage here, the point is today's not the day to buy it. You've moved up into resistance. It is held as resistance. If you can't bust to the upside, then you try to bust to the downside, and those are the parameters that we're taking a look at. Any close below 1217 and 929 is game. So I hope that helps you out. We also had a question from John, who wanted to take a look at XLP. And so let's go do that for John. Now we've got a question about gold, I see, so we'll take a look at that. So XLP is the ticker symbol. That is the consumer staples area. And what we know about the XLP is the following. I need to switch to another set of charts out here so I can pull them both up for us and take a look. I believe that XLP gave us a nice little topping signal, which has had, by the way, a huge run to the upside. Today so far down with 13 million shares. It's moving into a level where there was a wide-ranging bar that had 20 million shares, so it seems about similar type volume. When I say it gave us a nice little topping pattern, so I put this chart out here, what we can see is off of the lows that I'm referring to are back here on the trading day of April 22nd. What we can see from that low all the way up to the high that formed out here on July 14th, you got to number 7 with regard to our Chapman wave count out there. And you know that Stevie likes to sing in the key of G. Of course, A, B, C, D, E, F, G happens to be number 7 out there. So it's giving you a nice little topping pattern. Now, where is XLP headed to? Why do I have that trend line drawn like that? That's a really good question. Why do I have it drawn like that? I don't even see a good reason out here why it is drawn there. Instead, it should be drawn, let me see if I can just actually move this here. There's the trend line. There's the hammer candle. So at this stage, it must have just dropped down lower. What it looks like to me the XLP is doing is pulling back into the price area of about 53.86. Now let's go back to my other chart out here. Anything around 53.86, voila. 52.99 really becomes the number. Why? Because we have a brand new weekly TAS market profile that formed this week. Well, formed 3 days ago. Formed on July 25th. That would be Monday, right? So it looks to me as if we've got a nice little trend line that we looked at. We've got a nice TAS market profile weekly chart level of potential support out here. And it looks like to me that is where XLP is headed to. If it breaks the trend line, then we've got a whole different message out here. But that's what I would be looking at. And I would be watching for the volume as that happens. Hopefully it's less than 19 million shares. If not, then this thing's going to go test 52.65. So hopefully that helps John out, who was looking at the XLP, which is different than ELP, Emerson, Lake, and Palmer. Go see Greg Lake, if he is still traveling as a solo band. And hopefully that also helps out, who else? Bob in Colorado. This is Steve Rhodes. We get back. We're going to go take a look at gold for our Tiger's Den. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're going to go take a look at gold for Mike inside the Tiger's Den. And he's pointed out, a potential little double top here, a test of a swing point, the July 6th swing point when gold made its little high out here. So there's no question about that. Let me see what else. I should have done this earlier. My apology for not doing that, but was too focused on something else. So be it. So let me continue on here while I've got another chart that's updating, and then I'll go ahead and paint the picture there, or I'll try to paint the picture there. Now, with regard to gold, and I'm just going to take a look at gold on its own, Mike, versus trying to correlate it to the stock market, and just take a look at it as a separate instrument. And therefore, with regard to correlation impacts, then you kind of put those pieces of the puzzle together for yourself out here. When I take a look at gold, here is what we know. Here's what we know with absolute certainty, and that is the price point of 13.15.10 is really a very key level of support. We know that because over the course of the last 2, 4, 6 trading sessions, and look, it hasn't hit it exactly one of the days it didn't test it, but certainly 5 of the last 6 trading sessions, as gold has moved lower, that level, intraday it spiked it and moved lower, but that level has held as support. Now, here's what we know about that area. Give me uno momento, por favor. We're going to turn the price off here, and we're going to just pay attention to the blue lines. In fact, I'm going to turn those green lines off because we can turn those on. So we're just paying attention to those blue lines. Those are our TAS market profiles. Wonderful levels. Hidden levels of support and resistance that really help you and I in assessing what price is doing. Why is price finding resistance or support at a different area, especially if there's not a swing point there or some other element. So it's a beautiful set of tools. Now, why it's a really beautiful set of tools is because where we can identify where all the bulls or buyers are really camped out, where there's really significant levels of support. And when we get that little point of control, that's the largest congestion area. Picture yourself hopping in your car, driving, home from or driving somewhere where you know there's always going to be traffic, no matter what, and knowing where that is. On a stock chart, we know where the traffic is. It's that point of control out here. And depending upon where that is located and positioned to the top or the bottom of its box out here, that really helps us understand key levels of support or resistance. Well, clearly that point of control is closer to the bottom of the box. That tells us that this is a really, and we can just see with the price action, that this level here has really acted as support. So what are you watching with regard to price and the downside action? You are looking at a level of 13.15.10. Any closes below that, and what that's going to do is that should open up the doors to the weekly profiles, right? That's what would be next. And what would be next is moving down to 1289.50. And you take 1289.50 out, and then it becomes some more serious retracement of sorts out there. But you just have to take this one step at a time. What else is it that I know about gold, if anything, at this stage here? The other element to watch, to the upside. So to the upside, I believe that the number to be watching as we speak right now is 1339.90. As long as gold trades below that level, any moves to the upside are nothing more than a little bit of a counter trend rally in a metal that wants to move lower. If you take that out, I don't really care for what reason. It doesn't matter what the reason is. If you get a close above 1339, then you run all the way back up to the highs again, is likely what the message, maybe it would be even higher than that. So 1339 is a really key level of resistance, just as 1315 is a really key level of support. In between there, all you have is a lot of nothing. You got a lot of excitement for maybe one side or the other. But here's what you and I want to do. And there was a question that came in and said, what do I think is the most important aspect of technical analysis? What pattern, to be specific, was, this individual is asking for, is the most important pattern to pay attention to? I will answer that with 1,000% certainty. 1,000% certainty. The most important pattern in technical analysis is to always start with a clean chart and do not show up with a bias. I don't care if you're in a trade and you even have a bias. Check that gosh darn trade and that bias at the door. Technical analysis is about utilizing different sets of tools that you can rely upon and then taking the information that the market gives to us. Because no matter what side of a trade you might be on, when those levels either fail as resistance or fail as support, they are important messages, and don't start justifying to yourself why you still believe that you're right out here. In my opinion, the most important aspect of technical analysis, and many technicians, they screw up on this part of it. They just continue to show up with the same belief, even though, as a technical analyst, the information that's in front of them is telling them something different. So those key levels of resistance and support out there with regard to gold, they will tell you what your next action should be, depending on whether you're in a trade or not. So, Mike, I hope that helps you out inside the den. Those are the areas that I would be watching for today. Now, we've got another question in the den. Our man Dano, he's asking about trying to take a short position in CRM. That's Salesforce. .com out here, CRM. Right now, trade out at 81.32. Talk about a tight box out here. If we go ahead and, so I'm going to turn off the price level, so give me 1 minute out here. And I understand the reason, Dano, why you're looking at it. But now let's, and so you've got that tool to use. And now we're going to go ahead, and which is Stevie's red line. Dano was attended the workshop out there where I gave away the secret, exactly the ingredients, exactly how to go ahead and be able to apply that to your own stock chart so that you yourself can understand when things may be turning out here. And that says, let's go check, let's go get a second opinion. Let's go see where there's levels of support or resistance out here. In the case of CRM, as I turn the price out, turn the price off on this chart, we can see that there's a brand new box, a very narrow box compared to the last one. Now, the last box out here, take a look at where that point of control was, very close to the top of the resistance zone. If we turn price back on, we know why that area of resistance held as resistance, don't we? See, even without the price, we're starting a chart. When I say a blank chart, hey, there's a blank chart if we're going to go ahead and utilize this set of tools to help us identify significant battle areas. And that's really what we want to do. We want to understand where the battle lines are so you and I can make some decisions. Now, just a few trading days ago, we had Salesforce Innovation form a new market profile. So what this says to me, Dano, and it's a very tight range out there, right? And that tight range says is what you need to do, see as a next move out here in order to take a short inside of Salesforce Innovations. You want to see that daily level fail, 81.25. So far, it hasn't failed. It's been tested. It's been rejected. If it holds that support and you really want to go ahead and take a short on this, then the short would come from 82.48 from the top of that box, since it's such a narrow box out here. If this level fails to act as support, price ought to head down to 78.83, maybe even 76.56, which will go ahead and take you back into the June 27th area. Now, in the case of Salesforce, it's not like that level was a huge swing point, major volume or anything along those lines. So that would really become your target from a risk-reward standpoint, would be that June 27th level. And that was for Dano in the den. So I think we've covered just about everything that has been requested. Or do you have a request? Just pick up that phone. 877-927-6664. You can send me an email. I'll see if I can get that. Steve@TFNN.com. And, of course, in the den, just post your comments. Just put a nickel in the machine, and you'll keep me going. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Flat market, but we've done a lot to make it not flat, right? We've been looking for clues, and we've covered a bunch. We got another email that came in during the break from Pradeep. I don't know if I pronounced that properly or not, and if I didn't, my apology. But what we're going to take a look at here is First Solar, FSLR, and the question is, do I see any upside action in it, or should it be sold? So here's what we know about First Solar out here, truly hovering around down the by these lows out here. Let me put this on just a little bit longer term chart, see if we've got any better picture inside of First. Oh, that's not a very good picture out here, is it? First Solar from back now. It's a long-term picture, but in 2008, this thing was at 311. It's trading at $48 right now. When we take a look at this compared to the other market and so forth, you might say, I can only assume that you're trying to buy a bottom. That would be the picture here, right? Because we can see this has not done a whole lot, right? And the question is, hey, you're at where you're at in the position, which is not a loss. That's a good thing. But what's the likelihood, as we just simply take a look at this chart, what's the message of just this price pattern here? You know, it's got upside potential of $73. It's got downside supported around $42 out here. And it's not exactly like this thing moves real fast out here. So here's what we do know about the equity itself. We take a look at currently on a daily chart what it's doing for you. It's traded into really a couple levels of resistance here. It's trading below its daily TAS market profile. Never a good thing. It tested and rejected that level today, which is priced out at 50.06. The weekly, let me turn price off on this for you so that you can take a look at this. What we know about the weekly profile out here is that, let me turn off the daily for you. Right, we're just taking a look at the price. So I'm turning off the daily box. Here's what we know about the weekly. This weekly box is set up as significant resistance. Now, to the upside, if this thing can break through 49.78, that would be very nice. But, you know, sellers are truly lined up here. Where would you want to be buying this if you were going to buy this? Because of what we just looked at on the longer-term chart out here, it'd be at 45.22. It would not be at a price of around $49. Which is the point of control, and I think that's about where it's trading at right now, because you've got real resistance at 49.78. That's my assumption is that you'll take a look at this as a longer-term trade because you've held it for a couple of months out here, which is cool. But I'm not saying sell it, but I want you to know about the resistance that you have there. That way you can make the decision on your own. If I give you the data, then you just have to step back and say, okay, if you were going to approach this trade right now today, what action would you take out here? And that would probably be a good way to take a look at it. So upside action on this, 49.78. Probably that's it. If it takes that out, hey, then you are going to be moving higher out here. Bummer, though. because you've got this big move to the downside in volume on July 7th. It was 10.4 million shares. You are up on fumes out here inside of First Solar. Do I see a whole lot inside this? If I just utilize one more tool out here, I'll give you another level if you want to stay in this trade here. Don't let First Solar close below 47.06. That's Stevie's red line. That's my oscillator unchanged line. Right now, all you're seeing out here is a counter trend bounce. As we take a look at it, if this oscillator turns down, the price oscillator turns down again, it would do that with any close below 47.06. That's not good news. With regard to potential good news out here, price was moving lower, doing it with less relative weakness out here. Let's see, what wave did it get to? Not 7, but still, there's a sign of a bottom out here. But again, it seems like you're holding this from a longer term perspective, and I think you've got there's likely, not likely, there are better trades out here than this. But I'm just going to add my work to the work that you've already done, and then and give you those levels of certainly resistance and key levels of support that this needs to hold. And just simply, each day that you're in a position out here, I mentioned earlier, best thing you can do from a technical analysis standpoint is each time you look at the chart, in fact, use what Watson would do. And I'm not talking Tom Watson. Actually, I'm talking Thomas, the IBM. What was his middle initial there? That Tom Watson. Because he would tell you the reason for his success with regard to going into sales meetings was he would plan, just like you would plan any trade out there. He would plan, he would go ahead and take action. Before he would take action, he would look at his team and he would say, okay, we just gave the presentation, we lost a sale. What did we miss? What did we miss? In technical analysis, go ahead and take a position, and then come back and look at it and say, what did I miss? What is the other side of that trade out there? So hopefully that can assist you with regard to First Solar FSLR. Okay, so we've got about 3 minutes. Oh, that's just in this. And then we have one more segment out here. Again, the market's just really shifting itself into that flat line area and waiting for the release of the minutes by the Federal Reserve. We talked about the New York Stock Exchange yesterday, and it's really the same pattern here inside the S&P 500. Look at the number of days, basically since July 14th through today. Look at this narrow trading range boundary that we are in out here. Pretty frustrating. I don't care if it's summer schmummer out here. This is truly, and I do mean truly, somebody, and I wish I could tell you who it is. It's the man or the woman behind the curtain. But somebody is behind that curtain, because this is not usual. This is unusual. I mentioned to you yesterday, I took a look at the New York Stock Exchange and tried to go find the same pattern over the course of the last 10 years. I couldn't find it out there, because this is coiling, and it is coiling to break in some direction. I wish I could tell you which direction. Right now, when we took a look at the S&P 500, which is different than the NDX 100 out here, right? If we go take a look at the NDX 100, it's going to give you and I a different message than the S&P, and that there is where you like to have a little bit of certainty. Not that you can have certainty in trading. You like to have conviction, right? Forget about certainty. The certainty is use a stop. Then you can have certainty every time you trade. Don't risk more than 1%, and you can have real certainty out there. And if your stops get jumped, take them. But here is the deal. If we take a look at the NDX 100, not trading below Stevie's red line, and it's got a heck of a long way to move to the downside before it gets down there, 46.06. So who is it that is the dog, and who is it that is the tail? I'm saying right now that the dog is the NDX 100, is the NASDAQ. Gosh, and until it gives us that sell signal, this thing wants to move higher. It's given us a junior sell signal, not so junior. The level you want to be watching inside the NQ is 46.9650. If the NQ takes that level out, trades above that level, then I'm telling you what, I'm telling you right here, right now, this market is going to continue to move higher out there. I think it is more about the Qs than it is about the weak link, which is the Dow out here. When I take a look at that advanced decline oscillator inside the Dow, that's this one that I'm going to blow up on my screen out here. It doesn't have that much further to go before it starts to get to an oversold condition. And it's hardly done a lot of nasty work to the downside out here. We're almost up near its highs. And the the Dow is the one that is the weak link out here. But the NDX 100, the NASDAQ composite itself, You know, it is selling. It is strong, like 5-hour energy drink bowl out here. This is Steve Rhodes with TFNN. I wish I could give you more conviction about the markets, but the markets are not giving you or I conviction. The S&P 500 has got one message. The NDX and the NASDAQ composite has a different message. I think it's the NDX and the composite that are telling us the story. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back to this flat market out here. You know, the chart, if you watch us on TigerTV, the chart that we've got up on my screen out here, the top portion of it is the ratio that compares the Russell 2000 small caps versus the Russell 1000 large caps out here. When it's pointed in the northerly direction to the upside, it says the market is bullish. So the Russell 2000 at this stage is not tipping its hands out here with regard to what it wants to do. In fact, if I go back to Stevie's red line, I think we might have had the Russell up here. You know, if we're looking for a clue from it, we can see that, you know, that it's trading well above Stevie's red line out here, which is, well, I won't say well above, 1211.80. Looks like that's the number, so it's a few bucks ahead. 1211.80 would be the number to be paying attention to there. Hey, how about that semiconductor index? You know, do really bearish markets, are there really bearish markets with the semiconductor index moving to its new all-time highs? And today's candle, by the way, red as it is, it's not a bearish reversal signal out here. I mean, the semiconductor index, so when we look at clues, so on a market pullback out here, it's short-lived. I don't know if it just lasts a few days if we do get it, but until some of these other things really start to fail, here's the monthly chart out here. Where's the semis at? The monthly chart still moving higher with less relative energy, but still not a big deal. It's not a big deal out here because you need a whole month in order for that to be able to suggest that it's any kind of significant top out here. So, there's just and so what does that really mean? It really does mean there's rotation going on right in front of us, and that's going to be frustrating for both bulls and bears out here. But we're going to help you navigate. We're going to help you to some of these other instruments might be worth trading out here, like the. No, I almost said something. I don't want to say that. I don't want you to head over in that direction out there. So we'll just skip that. If I look at the advanced decline oscillators, New York Stock Exchange below zero says sellers are in control right now, but this has been oscillating up and down above zero, so we're not going to rely upon it to give us any kind of key information. NASDAQ Composite still above zero. It's in bullish territory. The Dow, which has been weak out here, has been below zero for days. It hasn't really mattered out here. So what else are we going to look at? I don't really think to belabor any more points out here would really be silly. So I'm not going to do it. Well, let's go look at the Qs though, right? Apple. Oh, Apple. Let's go look at Apple. Up almost $7, $6.50 out here. What is Apple doing? Running right into a natural line of resistance, right? That natural line of resistance being that gap to the downside. That's a price point of 103.91. So volume down there was a 114 on the gap down. Today you're up with 68. So you got nice volume to the upside, but it's running into that wall of resistance. All these folks that do want their money back. Okay, closing above 103.91. Whole different message. Says that you probably head back to the 108.95, maybe even higher level out here. But today, it's a nice shot. Continued trading ranges out here inside of Apple until it clears and closes above 103.91. Nice action out here. But it's not convincing me of anything other than running right into resistance. But look, let's face it, the QQQ series, it's able to move higher without Apple. The Qs are saying, hey, I want to go visit 115.75 because 115.75 is going to take it up to the highs of December the 2nd. You're in that swing point. That swing has volume of 22 million. You're in there with 10 million, almost 11 million today. We haven't been in with any kind of major volume all the way up, but nonetheless may want to go test it. So, folks, stay tuned because our polar bear, David White, he's up next. And on Wonderful Wednesday, we've got Tom O'Brien from 3 to 5. So have a wonderful Wednesday, and I'll see you on Tom Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.